Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon. And today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions and any questions you might have about your subscription. What to expect next, right? We had earnings from Amazon, Apple, Google. We have ECB decision. We have Fed decision. So, what to expect short term, going into the we're in Q1, so going into Q2, what to expect, and then what to expect in Q3 and Q4. If this is your first live event, do me a favor, tap in first. Always want to welcome new subscribers. This is my brief bio. I was Executive Vice President, Head of Technology at Option Express from its inception to 2007. I want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing that for over 15 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and artificial intelligence. Disclosures are very important. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account, based on my own risk tolerance level for general education information purposes only. All right, before we jump into a trading plan, let's talk about market conditions. So this week, again, the follow-through broke through the downtrend, continues to go higher, right? The headline news, QQQ is almost in the bull market. 23%, right? So by definition, bull is actually QQ isn't bull market, right? It's up 20%. And the question becomes, we had a Fed decision, right? 25 basis points higher, longer, but soft landing is possible, right? That's kind of the takeaway from Jerome Powell. Inflation is stickier, longer, but it's still possible for soft landing. And basically, today unemployment numbers were phenomenal, right? Better than anybody anticipated. Unemployment rate continues going lower, more and more the labor participation increases. This is all feeds really well into the soft landing narrative, right? And Jerome Powell said that maybe it's not the most popular opinion, but he still thinks that we can land the plane softly and unemployment will stay relatively low and companies are going to make money. So the question is, how far can this rally go, right? And especially today, we had a reverse, right? We were down 2%. Now we're QQQ is turning almost positive. So how far can this rally go, right? The spiders. We're basically approaching 430 level, which is August high, right? We're not that far away. We're at 420 level, close to 420 level. So another 2%. In April. So I would basically say right now it's pretty clear, the picture, right? And we've seen the earnings. Like if you watch the earnings, right? Apple was down 5%, just like Microsoft, and then now it's up 4%, right? Amazon is still down 5%. Google was down 6%. Now it's turning positive, right? Ford was down 10%. So Qualcomm was down 3%, now turning positive. So no matter what the earnings story is, right, people kind of look past through it, right? Amazon had pretty bad earnings, right? Slowest growth since, I forgot what it was, 2016, right? Apple, iPads and iPods are down, double-digit growth. Also had one of the slowest earnings, but nobody really cares about the earnings, right now, right? Everybody looks beyond what's happened now and look into the future, right? If we're at full employment and inflation continues to deteriorate, then at some point Apple will come back and start, selling more iPhones and more computers, right? And same thing with Amazon. So short term, at least right now, people look beyond that and they are looking to the future where soft landing. And in soft landing, that means bull market resumes and economy resumes. And yes, we're slowing down right now, but the data will get back, will get better. All right, so let's try to decide. So we have first half of the year, right, that ends in May. and then we have a second half of the year. Right. So May, right? Q1 is, I mean, earnings is basically over. I mean, there's still a lot of companies to announce, but you know, all the major mega cap and large cap technology companies already announced earnings. So the question is, going into May, there are two things can happen, right? Bull market, you know, basically say that, you know, we'll break through the 430, right? We'll break through the 430, and we'll finish somewhere between 480 and 440, right? In May. Right, so that's scenario number one, right? Soft landing, it doesn't really matter what the current earnings are, but inflation continues to go down, full employment participation, and companies, yeah, there is some slowdown in PMI numbers, but the economy will turn around. And then we continue to go in one, right? We finish somewhere between 480 and 440. Second scenario, we maybe you know, touch 430, maybe even 440, but we trade in the range, right? We trade in the range. All right, that's scenario number two. Scenario number three, we test or break 350, and we finish somewhere here. And then, you know, so, and that would be the second quarter, right? Second earnings. So so let's go through the scenario, let's vote. And this is an important exercise, right? If you think we're in soft landing, right, then you basically say 1. If you think we're in hard landing and this is just a false breakout, you know, then you basically say we're gonna retest H1, we're gonna retest 52-week low, right? Right, soft landing will say this was the bottom, we're not gonna retest it. Hard landing, gonna say, you know, we will retest it and break in H1, and then, you know, if you're not sure, you're somewhere in the middle, then you would say, okay, we're gonna finish somewhere to, you know, maybe at 416, maybe at 390, but somewhere in that region. Right, and that dictates how many bullish, bearish positions do you have, and you know, how do you rebalance your portfolio? Because I'm getting calls, we're getting support tickets. You know, everybody's asking, Vlad, which stock should I buy? You know, and they're giving me a big list. You know, 10 stocks. I want to buy, you know, Bitcoin, Rivian, Nvidia, Google, Apple, Microsoft, Coinbase. You know, all the favorite stocks of previous, you know, few years. So to answer that question, you have to kind of say, well, what do I think, where are we going to end up in H1 and where are we going to end up in H2, right? Unless you answer these questions, you really don't know what to buy, or, you know, at least how much of it to buy. So let's go through that scenario 1, 2, and 3. People will get killed, just my thoughts. I will take nature, just my thoughts. What do you think? Done. Yeah, so let's you tell me what you think, and then I'll tell you what I think first. Joseph, 2, Don, 2. Okay, anyone else? Anyone else? We have a lot of people today. Bala, Chuck, Claude, Don, Hasu, Joseph, Michael. If I butcher your name, just let me know. So I apologize. Patrick, Peter, Randall, Rad, Ricardo, T, and then a lot of traders, Victor, Virus. What do you guys think? Okay, 1, Tom, 2. Okay, so everybody's 2 except Ricardo, 1. So, okay, we don't have 3s. Majority 2, you know, my answer is going to be H1 is 2. Right. So, and I outlined that, you know, prior to this year, right? My core scenario, if you watch the videos prior, you know, in December or even October, November, my core scenario that we will break through this level in H1 by March. Right, that was my core scenario. And I basically alluded that this is very similar to 2008. 2008, the financial crisis, it tapped out in October, right? And by March, we reached the bottom. So there were a lot of parallels being drawn between 2008 and the current market, right? Let's pause that for a second. Let's do our time traveling machine. Sit and just travel. Okay, so October, right? Market reached the peak in October, not December, and it reached the bottom in March. Obviously, not the same financial condition. You know, Lehman and Bear Stearns is not collapsing. You know, so in terms of magnitude, I said we're not going to reach, you know, 50% drop. Even though in technology we're 35% drop was pretty similar, and then we reach the bottom, we're going higher, right? So that was my thought process, and I thought that this current earnings is going to be a lot worse. Not a lot worse. It's just like you know, I mean, you can't really say that Microsoft, Amazon, or Google or Apple had a stellar earnings, but I thought the reaction would be a lot worse, right? People are going to anticipate, and then just, you know, the wheels will come off the market and will reach the bottom. Similar process. So that did not happen, obviously, right? Value stocks, you know, home builders, they're at 52-week high. So then the question becomes, is this just a normal pullback, a little bit more aggressive pullback in the bull market will revert and the bull market will resume? Or we travel back, and does this look more like 2001, 2002? Right, we reached the peak again, September, October. And then, you know, in 2000 and 2001, we reached the bottom, very similar. We rebound. I don't know what was the rebound here. Yeah, something similar. Spiders up 25%, right? Spiders up 25%. And we reached the top February, right here, February, March, and then continuation and down. And we reached the bottom in 2000, you know, 2002, 2003. So my opinion now basically shifts. I still think this is a bear market, right? The reason that the fact that everybody, all my friends that got beat up significantly last year, they kind of weren't listening to me, and now, you know, they were, you know, they're kind of saying, well, you know, I lost money last year, or, you know, had a big drawdown. Now it's time to get back into the market, right? Now this is the time to get back, all aboard, fear of missing out, and we buy everything. My opinion hasn't changed. If you look at my, I said that the, you know, the core scenario we reached the bottom on March. You know, the worst case scenario, we reach the bottom by end of the year. So now I'm basically saying, yes, we're going to have 20, 25, 30% rally. It's just a rally in the bear market. And we will have this, you know, we will have a drop, right? We'll reach the stop January. Here we reached it in March. Was it March 25th of 2002? You know, again, we could be off by a couple months. Here the market reached the top in October, now it reached in January. So if you just push this couple months forward, then probably May. So we reached the top in May after 25, 30% rally, and then another leg down. Why, right? Just because, it, you know, this is also doesn't look like, we don't have September 11, thank God, right? We don't have September 11, we don't have the war in Iraq. We don't have, you know, this is inflation issue. Here was an inflation or COVID, so it doesn't have to be this way, right? Just like 2000, it could be like 2008, where, you know, the soft landing guys say, well, you know, this is 2008. We reached the bottom in March, a little bit early. Sorry, we reached the bottom in October, and then we you know, bull market continues. Few reasons why I don't think this way. Well, and that doesn't change, right? Okay, so sorry, I'll give you my opinion. I didn't ask your opinion. Okay, sorry. So let's do this again, right? So this is H1 answer 2, right? Then the question is this 2008 in terms of timing, right? We reached the bottom in March, October, and now continue going rally. Here, the October bottom, we continue going lower. So the question is for H2. Are we gonna be at 1? Are we gonna stay in this range 2? Or are we gonna finish 3, right? And we're talking about H2, end of the year, right? So where are we going to end up end of the year? Kind of give you my answer, but I do want to hear your answer. So is it 1, 2, or 3? Biden will not finish his term and there will be a crash, okay? Don, fear of missing out. Joseph, 2, 2, 2, 2, 1, 2. Okay, more ones, more 2s. Okay, so we have a little bit more ones, a little bit more optimists, and 2 and 3. I think it's going to be actually 2, right? So my answer is 2, right? So if H1 is 2 and H2 2, all it means is that we will break this bottom, right? You can't really, market is not going to stay like this till the end of the year. I mean, it could. It doesn't have to be, right? I mean, it could, I guess, just continue just going like this. It could. But I think we're going to drop, right? We're going to drop, probably not as much as I thought before. Before I thought we're going to reach 280, 260. Probably not, probably 320 at this point. But we will break 350, we'll reach maybe 320, maybe even 300, we'll see. And then end of the year, with November, December, we will have a rally and probably end the year flat. Flat, or it could be, just depends on the inflation date, it could accelerate and, maybe a little bit lower. But I still think we're gonna end the year in 2, right? Somewhere between 360 and 420. So reasons for that. One is right now there's a fear of missing out. So I think market is going to continue going higher, right? I mean, the rally is very strong. I don't know what can deteriorate. So most likely we'll hit 430 and even break, maybe 440, 450, right? What's the, let's see. So it was 25%. What's the rally now? 18. So 25, if it's going to be like 2002, 2003, so 430 mean 440, right? 25%. So, right. So I think now my core scenario, we hit the top somewhere April, May. In June, July, we start testing the bottom, right? And then towards the end of the year, a very small rebound. Why? Why do I think this way? Main reasons are interest rates, right? Even though Powell sounded very kind of casual and very relaxed, he did recognize that most likely the inflation, the goods inflation is going to continue to go down, but the services, the wages, the rents, especially with full employment, right, and high cash levels, nobody's going to lower their rents. I mean, they think that people are going to lower their rents, not if it's full employment or people going back to work, right? The reason they're going back to work because they can't afford their rents. So they, as long as you have a job, landlords, they might lower their rents a little bit, but not significantly, right? So that's the argument, that as long, and interest rates, right? I have some investments in properties and they're all are under, right? Because of the elevated interest rate environment, all these construction, all these projects, not all, but a lot of them, are underwater, right? So it's very hard to refinance your debt, right? If you have a short-term debt that comes to due date, right? These large construction companies, they're going to sell, right? They're going to try to find a buyer and get rid of these properties, and that's why, it hasn't reached that level. But at some point, the system is going to start shaking because simple finance courses. If interest rates stay elevated, right, terminal rates at 5%, then it's just a matter of time for earnings to hit the recession. And we actually seeing this right now. It's just right now everybody is looking at the glass half full, right? If Apple announced the same earnings, or Amazon, when Amazon announced the same earnings last year, right, it was down 20%, and the earnings were not as bad as they are now, right? Right, but it's a perception, right? So earnings here, Amazon at some point was down pre-market over 20%, right? It was down close to, I think, 87 level, right? And then it jumped after the hours. Here, Amazon basically down only 4%, and earnings are a lot worse, right? So the idea is that it's not that the earnings are bad or good, it's just how do people interpret these earnings, and do they care about the current quarter earnings, and do they look into the future? And if the future looks half full, right? If the future looks half full, then you basically you rationalize it, right? You say, yeah, maybe it's contracting, yeah, but it will restock, right? Apple will, they have new model of Mac, right? New processors. Next quarter the demand is high. Tesla is basically saying that demand is outpacing supply by the factor of 2. So things will get better. Things will get better, and that's why everybody's kind of looking outside of these current earnings. But basic financial principles is that if interest rates stay 5% throughout this year, then at some point we will hit the earnings recession. If it's not Q4, it'll be Q1. If it's not Q1, it'll be Q2. If it's not Q2, it'll be Q3. But earnings will get worse, right? Because two reasons. One, debt is at 5%. The other reason is the dollar, right? Right now, everybody's kind of ignoring the dollar, but dollar is, it's not reversing, but it's stable, right? And we see this green candlestick for the weekly chart. It's holding on to this 100 level. It's been as high as 103. If there is a follow through, let's say next week, where dollar gets to 103, 104, 105, right? If there is a rebound, we don't know yet, but I do anticipate at some point this, right? And if there is a rebound in the yield, right, at least it gets to 3.7, 3.8, right? Unemployment is historically low, right? 40-year low unemployment. That means the Fed is going to have to stay at elevated interest rate higher, right? And rates are going to start at some point going higher. So those are the main reasons. As long as the dollar doesn't do, if dollar does this, that's soft landing. Then I would have to go back to the whiteboard and change my mind, right? If interest rates drop to 2.5%, then yes, then the financial conditions are getting more accommodative, and then market will rally. But as long as the dollar is not collapsing, and as long as the yield is not collapsing, at some point, market will capitulate. Probably not the first half, because now we're entering from seasonality, very bullish time of the year, and everybody feels a fear of missing out, right? Coinbase is down, right? I lost, half of my money last year, so I'm going to double down, right? I'm going to double down because, okay, it's going back to 350, right? Coinbase is going to 350, buy at 860 until it's too late. And all the charts look the same, right? You look at Meta, you look at Netflix, the charts look identical. So those are the reasons, right? The reasons I think I'm not changing my opinion, even though obviously, I'm, not only I'm off on timing, I'm also off on the magnitude, right? For such a fast rally so quickly, it's kind of, but we know, it's almost the same rally we had in June, right? This rally and this rally are almost same magnitude. They're not really much different, right? Here, the rally is 18%. Here, the rally is 19%. So, 18%, 20, 25, that it's all, I think, in the same realm. All right, any questions? So what option strategies would I put down now? So right now, the best strategies that work, so that before strategy. So again, stock forecast toolbox, next 10 days, the model basically says, all aboard, positive trend, bulls are in control. Doesn't matter what the news are, good news, bad news, fear of missing out, we're buying stocks because the future looks bright, right? So uptrend. 6 months, the vector got a lot more basically neutral. If it was negative 6-10% before, now it's basically neutral. Model basically says, based on the current price action, it's a neutral strategy, right? Market model is neutral. If the model is neutral for the next few months, the best strategies that work are market neutral strategy, cover call, spreads, butterflies, iron condors. I mean, you're limiting your upside, but you're also limiting your downside. So in the lead circle, this is kind of a classical example, iron condor, right? So my favorite strategy are spreads. Sometimes I do multiple. So I am buying TLT on pullbacks, right? TLT pullback, right? I think in both cases scenario, whether it's a soft landing or hard landing, interest rates are going down, just for different reasons, right? Soft landing, they're going down because inflation is contained and there is no reason for, employment is high. There's no reason for the Fed to continue, staying in these restrictive levels. So it'll just lower interest rates, futures data showing that as early as November. Hard landing basically says that Q1 or Q2 we will start see earnings recession, and for that reason Fed will start lowering interest rate. So both scenarios, they basically think interest rates are going down, so I'm keep accumulating TLT. The risk, if inflation comes back higher, right? If you look at CPI historical data, and this becomes more and more persuasive. CPI historical chart. Where's the chart? I want to see it. Where's that consumer? By year. I don't see it. What am I looking for? Sorry, let me just CPI historical history by months. Okay, so this, right? So CPI consumer price index for consumers, right? So there was a big rally, big pullback, right? You know, was it from 74 to drop to 76, right? And then from 76 to 79, 80, big jump, right? So Fed is pretty worried about a repeat of 70s and 80s, right? Where for a couple of years it drops, and then interest rates go down, the economy is expanding, and then inflation goes back up, right? Where the soft landing basically says, no, this is a transitory, is just a little bit longer transitory than everybody anticipated. So that more and more people concerned about this wave, right? Which would make, obviously market would drop a lot more if that is the case. So that would be the risk, right? That would be the risk of buying TLT, because if inflation does come back, right, like in Spain and Italy, inflation was higher than expected, right? If we have a couple more data points, or in the United States, we're going to have a print higher, then TLT will drop. I still think Fed is not going to make the same mistake. They're not going to pivot, right? They're going to stay on the course at least until the end of the year. So for that reason, I think this is my favorite trade, is keep buying TLT or other, bonds. Not high yield bonds, but corporate bonds, high grade corporate bonds, municipal bonds. So the strategy that does work in this environment for me, Apple, right? Apple announced earnings, right? As long as Apple is trading in the range, I was able to collect 65 cents on the call, 41 cents on the put, $1 on a stock that trades around 140. I closed the put, call, Apple is reversing, so there is a risk, right? There is a risk to the upside, right? But that's the strategy, is the iron condor, right? That the Apple will reach 160 level, right? And then I would have to, either hedge my position or close the position. Maybe I can just close it and not take more risk, which I'm gonna do. I mean, it's low probability, it's gonna jump another 2%, but who knows? I mean, market is reversed. Now I'm just going to close it. I don't want to take too much risk. Okay. So that's the strategy, right? It's the selling iron condors, right? I sold 139, 127 put. I sold 160, 180 call, collected $1, and my risk is $12, right, on the put spread. $12 on the put spread, and the calls actually a little bit wider, 20. So 1 out of 12, that's about 9% risk out of 25%, but you can get 5% return, 10% return on the risk you're taking. On the stock, on the value of the stock, about 75 basis points, 50 to 75 basis points. So the point is, if you can make 5, 10% return on your strategy, it accumulates, right? So it's all about compounding investing. You can do the same strategy. The reason I'm doing Apple is because one of the, again, their argument that VIX is very low, right? VIX is, reach 17 level. With all the uncertainty we have in the market, VIX at 17 doesn't seem like a reasonable number. But the consequence of that there's less premium in the options. So earnings obviously give you a boost into the VIX, into the premium of the options. But you can do the same strategy with ETFs, spiders, QQQs, or stocks that you're trading. Let's say you do want Tesla, right? Everybody's asking me, should we buy Tesla? I think as long as you're a short-term trader and your time horizon is May, I think it's a higher highs, higher lows, right? Buy and pullbacks. The strategy going into April, May, buy and pullbacks. Market pulls back, you buy Tesla because Tesla is going to lead the market, right? If you don't have an exit strategy and you're going to hold it for the next year or two, you can buy a small amount, but I still think we will revisit this level and probably break this level to the downside at some point. It might not happen H1, but more likely it will happen in H2. So Chuck, thank you. When do you think T-bill rate will start dropping? Well, Treasury bills rates already start dropping, right? You can see the rates start dropping, not significantly, but I think rates are going to stay for now probably stable, right? For now, they're going to stay relatively stable, except either CPI data, inflation comes back, and then the rates will go down, or recession will start, right? Or more and more people will believe in recession, right? So this is recession, right? This is inflation comes back. This is recession more prominent, and until then, it's probably just going to keep chugging along. What would be an iron condor? Iron condor on SPX. So, I give example on spiders. I think market is going to have a hard time breaking through 430 level, right? When we are at 420. So I would sell a call 430, maybe 440, right? And I would go. I would go out. Ideally, you want to go to September. June might not be enough. So I would go into September and sell a call spread. Obviously, if you want to do weekly, shorter term, then you have to come closer. But I would sell call here. If we do get to 400, I would sell 380 put, right? Sell put. If we do drop, I think at some point we will drop. Market is just way overextended. Probably next couple of weeks we will have a retracement, right? Maybe 400, maybe even 390, right? And then again, right? So I would buy on the pullback, right? I would sell call now, or I would sell call now, and then I would sell put maybe in the next 2 weeks. Put spread, sell put spreads, sell call spreads. So that would be an iron condor, because I think until June or May we're staying in this box somewhere between 430 and 380, depending on the news, right? The wage growth was actually slower negative. What does this mean for the Fed interpretation of this lagging indicator? the point is, so yes, so I mean, Fed does not want unemployment to rise, right? They do want the wages to go down. So if there is a wage growth deceleration, and we saw that in the consumer, what do you call it? Employment cost index, right? I keep forgetting. So there, if the employment cost index is going lower, I mean, it's not great, it's still elevated. But every time you see a pattern of lower lows and lower highs, people extrapolate to the end of the year and they basically say the wages are going to continue down. So if the employment is high, but wages are contained or slowing down, then interpretation is what you see in QQQ, right? QQQ was down 2% pre-market, right? Pre-market we were down more than 2%, and now we're turning positive, right? So the interpretation is the glass is always half full or half empty. For every argument for soft landing, there's an argument for hard landing. So it just depends on people. Some people see the glass half full, some people see half empty. So it just depends what your, I think this depends on your personality, right? I think if you're always a bull and you're always optimist, you probably see a glass half full right now. I'm probably more pessimist, right? I'm an introvert and a pessimist. Not pessimist, but I'm an introvert, slightly pessimist. I always see the glass half empty, right? If there is one-to-one arguments, right? I mean, sometimes I'm a bull, sometimes I'm a bear, but this is a lot of uncertainty. We never had a situation like this, right? Maybe 70s and 80s. I wasn't trading in 70s and 80s. I think bears have a better argument than the bulls do. Even though right now it's pretty painful to think, you have to respect the price action. You have to respect the tape, and tape shows you, that hard landing guys are really, really wrong, right? Because I didn't think we would break this downtrend, but we have decisive breakout. QQQ is in bull market, Russell 2000 bull market, value stocks are in bull market. By definition, we're in bull market, right? We are in bull market by definition. Rally over 20%. Does this bull market continue? Well, that's the question. Does the bull market continue into the end of the year? And my answer is no. All right, any other questions? So elite trading circle, what other strategies? I'm personally, I did have pretty large positions in March. They're not coming, they're not gonna happen. So I am closing all of my March spreads. I'm closing call spread, right? So I have some bullish positions like this IWM call spread, so I am closing it for profit. The March put spreads, I'm just closing them because QQQ is not gonna drop to 52-week low. I don't believe, not in Q1. That's not my opinion. So I'm closing put spread. I still have March call spread. The goal is to buy them on the pullback. I think in the next couple of weeks, once the earnings subside and all these euphoria ends, I think we do have a pullback. Not a significant pullback, but some kind of a pullback. So spiders. I don't know, 200-day moving average. I mean, there is very often there is a retracement back. So 200-day moving average, I would be a buyer, right? 400, 395, I would be a buyer, right? Because there is a crossover and usually there is a continuation, right? 70%, 65% of the time when 50-day moving average trades above 200-day moving average, and for the past 2 weeks we're above 200-day moving average, there is continuation, right, to 430. But there is also usually pullbacks. So on the pullbacks, everything that's in Q1 that's bearish in Q1, Q2, I would consider trimming or closing, right? If you want to be hedged, roll it to June, better September. I would build your bearish hedges going into September. By September, October, we'll have Q1 data, we'll have Q2 data, we're going to have almost a lot of it Q3 data. I think one of these Qs you will have, Amazon is going to have worse earnings and Apple is going to have earnings. People are not going to buy more iPhones, they're not going to buy more laptops, right? Because they're going to be conscious, because every time you go to Whole Foods, your eyes, my wife stopped buying in Whole Foods, and actually inadvertently, which is a very good barometer of economy, Whole Foods actually came out and Amazon said that, listen, all the suppliers, you guys have to lower the prices because the traffic in our stores have decreased significantly, right? Because people are conscious, right? And you already see this in the earnings, and I think it's going to get worse. It's not going to get better, right? Because the interest rates are elevated, and yeah, 30-year mortgage did drop, but it's still 6%, right? It's still 6%, which is a lot more than a year ago. Chuck, SPX and spiders to me the same. There is a cash settle differences. I don't wait till expiration. I'm just more comfortable trading spiders, right? Spiders is ETF, SPX is an index. Spiders, the problem is if it's in the money and there's a dividend, you will have to pay a dividend, right? On SPX, you don't. So you don't have that risk. But I don't wait till expiration. I would just be in and out. So with spiders, you always have to be careful of if your short leg is in the money, right? Then you might own a dividend. You might owe a dividend, right? You might owe a dividend. Any stocks worth looking? The problem is right now you see kind of rotation out of the great ideas of last year, right? Merck. Everybody was in Merck last year, significantly down. Everybody was in IBM last year, right? Significantly down. Everybody was in Procter & Gamble last year, significantly down. Everybody was, what other? ExxonMobil last year, significantly down. So you do see that in terms of value stocks, they're not going anywhere, right? There is a euphoria in high beta stocks, but your Procter & Gamble, your Caterpillars, your Deere, they're not going anywhere, JP Morgan, right? They're just staying there. So buying the value stocks doesn't make any sense to me. I mean, obviously there is an exception, right? So there could be like Schlumberger, and I'm not a bottom-up approach guy, right? Can you figure that Schlumberger is going to outperform? Yes, but you can see that it's just a matter of time before it drops. So I don't really have a good idea. So now everybody's buying Coinbase, right? They're buying Coinbase, right? They're buying, what else are they buying? Meta, right? They're buying Meta. They're buying stocks that are extremely weak, had huge problems, still have huge problems, but the problems are not as bad as everybody, right? The pendulum swings to extreme, right? The pendulum, it's not like Meta or Apple or Facebook are in great shape, right? It's just pendulum swing too much on the downside, and now it's swinging too much to the upside. It always does, right? But that doesn't mean that you need to chase these rallies. So you can trade anything, right? So to answer your question, you can trade any stock. Any stock is tradable, right? You can buy Meta, you can buy Procter & Gamble, you can buy JP Morgan. As long as you have well-defined entry and exit points, you can trade any stocks, right? And that's why we publish actually every week idea of long-term trades, right? If you want to hold something for a month, you go here. My best idea, Broadcom, Box, right? British Petroleum, right? You can trade these stocks. They do have momentum, right? You probably want to look at the earnings. BP probably sold off by now, right? Pull back, but going into the earnings, you have to be careful, obviously, but these are the best idea. If you want to hold position for a couple of weeks, okay, weekly trader. What are my best ideas? Caterpillar, right? DBC, right? Commodities, Lockheed Martin, right? So you look at the chart, LMT, I think it's a good idea. Again, it's a trade. It's not an investment, right? It had a strong pullback, recover. So I think LMT, is a good idea. But the only way you would, these are trade ideas, right? These are active trader, weekly trader, monthly trader. You have your target gain, you have a stop loss. If you want to buy something and hold, obviously I was wrong, right? I had the same answer, when QQQ was at 280, right, or 290. I could be wrong that again, but it's a trade, right? Can it get to 330? Absolutely, it probably will get to 330, which is 20 points. It's another 7%. But you have to enter it and you have to manage it carefully, right? Target gains, stop losses. Right now, I would not buy value stocks. I would buy technology because that's what drives the market. So Apple, today, Apple, right? Huge reversal in Apple, huge reversal in Tesla. Apple and Tesla is where your money should be short term, and you just trade. Every time they pull back, you buy them. And that's the trade till probably April, May. So hopefully, Faye, I gave you the answer. So how do we help? Again, we do have ideas: weekly trader, active trader, monthly trader. We're giving you stock, chart, entry, exit points, right? And I suggest you follow your trading plan. This is suggested trading plan, but the rules are, you should not have more than 4 positions with maximum loss of 2.5%. That is the number one rule, right? Going back to your rules, right? You need to have a trading plan, and the trading plan should consist of cash, right? 30% in cash if you're in soft landing. If you're on hard landing, I would bump it up to 50%, right? Especially when the market is overbought. And then portfolio drawdown, right? Portfolio drawdown is you can trade anything you want. Here's our suggested ideas based on our models. But 4 active position was 2.5% of account value per position of risk. And since the market is volatile, right? Apple down 4%, now up 4%. Microsoft down 5%, up 5%. In a matter of hours, we're not even talking about days, hours. Then I propose you break this down into dollar cost average and risk only 1% of your account value per trade. And you can build ladder, right? You can buy Microsoft March, and then you can buy Microsoft maybe June, right? If March doesn't work, then you do June, right? If QQQ put spread doesn't work in March, you can put now the one in, in September. But if you're down more than 2.5% on your hedge, then you probably want to take a break. Don, thank you very much. Be safe. Thank you for kind words. All right. Any other questions? So what else do we offer? So we talked about active trader, weekly trader, monthly trader. If you want to follow my portfolios, right, we have spread trader, shadow trader. If you only trade in options, it's spread or premium, right? The same thing, spread or premium. You follow my spread trades like IWM, I showed you the spread that I just closed, or QQQ spread that I just closed. If you want to just stock, it's a robo investor, then you just follow the trade ideas. And then elite trading circle is where actually if you want to trade basically everything, right? So you go to trader log, you enter your phone number, and then every time I trade, you get a message, right? If I close Apple, you get a message. If I bought TLT, you get a message. If I'm closing IWM March, you get a text message, right? You get a text message every time I trade. Thoughts on buying Google? I mean, Google is down, Apple is up, Amazon is down. I personally, out of mega cap, it's Apple and Tesla. They are outperforming, they're going to continue outperforming. Google, I think, is weak and weaker. I mean, if you want to buy it, I mean, you buy it in pullbacks, right? Probably too far, too quick, right? But if it drops to 100, you buy, right? I wouldn't be surprised that Google is going to be at 100 in the next week or so. Jack, hopefully it makes sense. Any other questions? Also very important to watch the videos, right? You can join us on YouTube. On Monday, there's the live trading room. No financial commitment. You can be part of our Tradespoon community, right? And trade right along with us. Scott leading, 962, thank you. So if you like the video, please click on subscribe. If you like the content of any of these videos, we have upcoming live trading room right next week. please share on social media, right? Please, Instagram, I don't know, Facebook groups, Wall Street Mavens forum, Reddit forum. Just take a link and share it. It helps us with marketing efforts. It helps people, if you benefit from these ideas or from this content, most likely other people will benefit from that too. So please, if it's not too much to ask, share these videos on the social community. And you don't want to trade alone, right? For every bullish idea, there is a bearish idea. Right now, there is no clear case, right? Bears are, scratching their heads like I am, and basically asking ourselves why multiple times, right? Why do I think it's bearish? Obviously, market shows me otherwise, and why, right? So, and then bulls are the same way, right? Bulls are kind of celebrating right now, but when the market drops 10-20%, then they are scratching their head. So it's not a clear case, right? The market can go either direction, right? So you kind of want it to be part of the community where you can, bounce ideas, talk about, and make decisions. Any other questions? We have never seen a photo of Scott. Ricardo, I'm not sure. Not sure. It should be there. You want to see how Scott looks? Let's see. Market event recordings. You can go to event recordings. You can active investor workshop, search for estimated. I don't know why he doesn't. He used here. So here's how Scott looks. I don't know why he started taking them out. But that's the photo of Scott. And I encourage you, this is a lot of learning content, right? A lot of free education under active investor. Any topic you want, you can search puts, anything puts related, you'll see it here, right? On puts. Chuck, YouTube, I mean, Tuesday, if you want to be part of Tuesday live training room, then you have to sign up for Elite Circle. If you just want to try it out or watch the recordings, then you can do it on YouTube. Ricardo, thank you. Natural gas stock. Natural gas is, again, it's one of those hypes, right? Everybody anticipated that the winter is going to be cold and Europe is going to freeze to death. And it was a lot warmer, right? The containers are staying at the shores with all that gas. Nobody knows what to do with that gas, so it dropped, right? Elevator up, elevator down. It always works like that. Every time you see elevator up, it's elevator down, right? You can look at Bed Bath and Beyond, right? These vertical moves up always ends up with vertical moves down. It doesn't matter what stock you're going to show me, whatever the chart is. Right? These moves are unsustainable. Same with dollar, right? This move was unsustainable. It did drop, right? So elevator up, elevator down. I mean, it could repeat, right? Elevator up, elevator down again. But this is the idea of pendulum. It's not the idea of trying to rationalize why it's happened. You just need to realize you can only push this ball, right? If this is a ball, right? Physics, it can only go high as, right? It cannot go into infinity, right? At some point, pendulum will start swinging this way and it will turn around. You can rationalize why it's turning around, but it's just physics. All it is physics, right? You can only pull the string so far, right? Until it breaks. And then it has to swing back. So to answer your guess, it's not because it's warm or because this and that. It's because it just went too much too ahead in one of those, buy the rumor, sell the news. Buy the rumor, sell the news. And the same could be asked today for any of these stocks. Why is Apple up 4% when it was down 5% after the earnings? What is so great about Apple earnings that all of a sudden it's up 5%? And the answer is the pendulum swing too far to the left, right? And then they said, well, yeah, iPad's 30% down, but we're going to have new models of Macs and with new chip, and people are going to be buying them. okay, I mean, seriously, I mean, how do you know people are going to be buying them? Maybe they won't be buying them, or maybe not as much. I mean, the data shows you otherwise. But people, it's again, half full, half empty, right? You're trying to look at the gas and you look at the half empty, and the other half looks at the half full. So, but bottom line, you have to respect the price action, right? And if Spider shows you up and broke the downtrend, then okay, then doesn't matter what your opinion is, at least short term it's heading higher. All right, 10:27. You guys been awesome. I will see you at the closing bell. Please like us on YouTube. That will help us significantly. It will help people who are sharing, bring friends, attend live sessions, or attend recordings. And I will see you either at the closing bell or Monday. Thank you and have a great day.